This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today, after 4 days of taking no trades and 2 days of missing the move back to back, on the third day today, I finally cracked and I just took a trade out of complete frustration because I thought I was going to miss the move again, which essentially I did. I ended up chasing the market. And then the second trade that I took is one that I can't necessarily count because after the first trade, the market put me in such an emotional situation where I knew that I was not in the right mental state to continue trading. I knew I had to walk away, and I did, but I'm still looking at the market as I'm reviewing my day. I'm looking at it. The buy looks really good to me, and I take it, targeting the move that I approached the market looking for today, and it delivered exactly as I was looking for. But I took it on a different account because I knew that if I took it on the account that I'm trying to work on building right now, then that would just lead to a complete disaster. Because if I lost again, I would really dig myself in a hole and hurt myself emotionally and mentally. So I had to open up an entirely new account and then trade on that, and I took it and it worked. So I documented it because it's what I was looking for, and it's a good example of a good setup, but at the same time, it's not something that I can really count towards my monthly performance because I had already walked away. I have a rule that says I can never come back after walking away. So this is in violation of that. I just wanted to take it on a separate account where I knew there would be no emotions involved if it played out or if I got stopped out to see if it would deliver, and it did perfectly. So let's get into it. So today is Wednesday, July 23rd, 2025, and let's break down my bias for the session. So today I was bullish based on the weekly chart narrative. I think this weekly is likely to be a consolidation range because there's nothing on the economic calendar to drive price, but there is a lot next week. So if we look at the economic calendar, we can see that this week, not much going on, right? We have a high impact driver, 2 high impact drivers on Thursday, and that's about it. Besides that, there's a bunch of orange folders, but if we look at the following week, what do we see? A lot of red folders. We got GDP, NFP, FOMC, and PCE all shoved into the market at one time over the course of 1 week. So I'm thinking that this week's probably going to consolidate, and then the next week is probably when we'll see some big swings. The market actually move with all those drivers. So I'd like to see the market open and continue to drop below the pre-market overnight sell side to buy, targeting the smooth highs left in London, and beyond that, the high from yesterday. So here I'm establishing exactly what I want to see, the objective I'm looking to deliver, and this played out perfectly. And I executed on it, and it worked, but it was just after I cracked because I did not want to miss the move the 3rd day in a row and do nothing for the 5th day in a row. Now this is also another element to why I probably missed the setup. It's just something that I'm experimenting with in my approach where I'm coming to the market with a bullish and a bearish idea. Usually on my best trading days, I come to the market with conviction in one idea. I'm either bullish or I'm bearish, never both. But because that kind of approach worked on Tuesday and Wednesday of last week and gave me solid setups, now I'm kind of experimenting with it and just playing with it and seeing if it works. That's kind of made me extremely indecisive going into 9:30 and what I want to see. It's made me really hesitant to execute on the setups that I'm looking for and that I know that are going to play out. But it worked Tuesday and Wednesday of last week because there was simply one level that I knew price could deliver, regardless of if I was bullish or bearish, depending on how 9:30 opened, and that worked. Today, it made me extremely indecisive. Well, I don't think that's necessarily the primary reason why, but how 9:30 developed just had me really confused. So I was initially looking for my bullish premium gap opening setup. I wanted to see a drop take overnight pre-market sell side as it trades at the discount of the overnight range, then work for London high. And my alternate idea, this is the approach that I'm kind of playing around with, like 2 ideas, bullish and bearish. If price begins spooling for London high, pre-market, leaving the smooth sell side below and opens high on the day, taking London high first after 9:30, I know to sell targeting new day opening gap because it overlaps with previous day settlement and smooth lows. It's a strong draw. Okay, so if price does this, I'm going to buy it. If it does that, I'm going to sell it. But it did both. So what do? That's the thing. And that's why I couldn't really trust it because I had both of those ideas on the back of my mind. So if we go to the weekly, remember I'm looking for this to be a consolidation range because there's nothing on the economic calendar, right? Daily, quick top down On the daily, market drops into this gap, closed above it. It's a sign of strength. I don't require it to deliver Tuesday's daily low or previous daily low because the market's in consolidation. It doesn't have to go all the way down there. You see where the low day formed today, boom, right there at the upper quadrant. And I read that and I took it and it worked, but only after I walked away, after chasing the market out of pure frustration. So this drop down does not last because of the weekly chart narrative. And look what it left behind. Extremely smooth. Boom. Right? This is what made me extremely confused, and I had reasonable doubts about the move going lower, which made sense, reasonable doubt, because of what it left behind and because of the weekly chart narrative. The market lays this fat down candle, but it overlaps it in the following because of the weekly chart and because of what it left behind. Extremely smooth highs, and you can see that higher definition on the hourly time frame. So this is what kind of made the delivery confusing today, because I saw the market took this high, did not take these highs, did not take London high, which if I wanted to sell the market, I wanted to see it take these highs first and then drop lower. That was in my pre-market plan, but it didn't do that. So that's why I was extremely confused on if this was actually the real move of the day. And because I missed it, I got extremely frustrated with myself and I FOMO'd into the market. So go back up to the hourly, kind of slow it down for a second. Right? Also notice what we see from Monday and Tuesday's range. This is also extremely smooth. I'm not convinced the high's in because of how smooth it's left up here. This is also relatively equal. I'm not convinced that the market's just going to move away from that and leave it alone when the weekly chart's bearish or the weekly chart's bullish and the daily chart's bullish. They're both bullish. Higher time frame's bullish. I have a consolidation narrative because of the economic calendar. I'm not expecting this drop lower to last, but because I missed that, and because I missed the move 2 days in a row, and I didn't want to do nothing for 5 days in a row, I ended up chasing this out of literally just pure frustration. So here you can see even more clarity, in-depth details of what the market presents at these highs and lows. These equal, so the market's likely to draw back to that. These equal, market's also likely to draw back to that. And we can see how it delivered at 930. Made the sell make sense at first because we have these lows below. So everything I do is basically just based on liquidity. That's it. That's what I'm targeting. That's what I want the market to move for. So because we had this small pre-market range seen on the 1 minute time frame, it did not take this low, turned away from it, took that high first, and then boom, right at 930 it drops for that. So this sets up the sell because it did not take that low. It turned away from it, priming that low, engineering buying interest. So engineering sell side liquidity below that low because it did not take it, turned away from it first, took this high, and then did that. And there was a huge divergence with ES. Look at the S&P at the time. The ES clearly cleared London high, right? So I'm thinking, okay, maybe the NASDAQ is not going to take that high because the S&P didn't. But that SMT does not stay intact because the higher time frame is bullish. On the 1 minute, okay, I have to pull this up first. Let's go to the session recording, okay? Explain my thought process. So here's the pre-market range. Go to the 1 minute. Everything that I do is basically based off a range because every move originates from a range, and the range is going to engineer liquidity on whatever side that it does not take first. So if it takes the buy side of the range first, takes the high of the range first, then I'm looking for the low of the range second. It's that simple. So because price left the range high first, at this point in time, I'm thinking the market's going to reach up into the London highs, take those, and then go for these. But it didn't do that. It just took this high right here, and then it just left right at 930. So if we go to recording, so I'm dropping this little eye icon down there. I'm like, I see it leave the range high first. I'm thinking, okay, this thing's obviously going to go down here. Fast forward, 930 opens, just breaks lower. So I'm trying to frame the risk on this idea. Where would I get tagged in? But it just left so suddenly and basically covered the entire overnight range. That's another reason why I was kind of doubting the idea, because of how fast it covered the overnight range. So I'm thinking about how far down can this move deliver? And it basically already dropped for the Asia low here. So between what it's already done and what's left from the overnight range and how far it could trade, trade lower, like beyond this low right here, there's not much it can do, which is why I started forming a reasonable doubt about this idea. Go to the live trading check-in. I'm indecisive right now, not sure what to do. It's setting up very similar to yesterday, but there's a few things that are different which could make this drop the Judas swing. So I'm reading this shit as fake, and it was, but I chased it out of frustration, and that's the painful part. That's the part that hurts the most. I don't like how it left London buy side smooth, but there is SMT. I also don't like the first 5-minute close with the lower wick, but at the same time, it has not delivered Asia low. I lean slightly bearish, but what I see right now makes me indecisive for the most part. At 940. I don't like the idea of selling this. It seems like a trap because of how it's setting up. I think it's already gone so low on the day with not a lot of range from where it's already gone and where it can go. So I think it makes more sense to buy it. In retrospect, was that the fake move? Yes, I got that right. All today required was that I wait because I knew how the market's set up. I did not take the London highs at 930, dropped for the overnight sell side first. That was bullish. And it's starting to look very bullish to me when the market drops, but leaves these large lower wicks. You can see this is my trade model. If you watch my videos, you know this is how I trade. This candle drops, takes that low, close back inside the range. Another sign of strength. And then it just continues to drive below. Look how many times it drive below the previous low and failed. See how many times it does that? It did it once here, so it's twice, 3 times, 4 times, 5 times, and then overlaps this down candle. I'm buying that on the 1 minute. Another reason I know this drop down is fake because of how high resistance it is. You see how much of a hard time the market has going lower? It's very slow. Each time it makes a drop lower, followed by a move higher, chops around, another drop lower, chops around, another drop lower, and then finally, boom, large up candle back inside the range. So I'm buying that large, open, obvious gap. I'm going to buy that right there. My stop loss is going to go with the low of that candle because it's large and it's obvious. That's a short. This is a long. Here we go. And then I'm going to target the obvious buy side left behind. So this is the trade that I can't really count because I already walked away for the day. I knew that I was not in the right emotional state to continue trading. I have a rule that says I cannot ever come back after I walk away. So if I count this towards my monthly performance, then it's just reinforcing a bad habit, right? So I want to ask you, should I count this towards my monthly performance? Does this count? It was exactly the move that I was looking for. I timed it properly. I executed on it. It delivered the objective I was looking for. Should this count? In my book, I really don't think it should. Maybe I'll just leave it in there for a little confidence boost, which, what is that going to do? What do I need to boost my confidence for? Like, I want raw data that shows my true performance and how I really perform on a day-to-day basis. Don't want to inflate my numbers. But I saw this. I just did not allow myself to take it on my normal paper trading account because I didn't want to damage the numbers that I have going there. So I took it out. I opened up a new one, literally, and I just took it here. So should I count this? Yes or no? Let me know. And then the sell that I took was the good thing about my risk to reward, look at this. I lost 395 on this trade, and I made 2.2 on the next. So that says a lot. That says a lot about my risk to reward and my trade model. It's efficient. So here's the trade that I took. It's on this candle right here. And here's what happened. So you can see in the daily notebook, at this point in time, I don't like the idea of selling this. Why did I sell it then? Why did I sell it then? Come on, bro. Come on. Can't hurt yourself like that. I have to go back to the recording to explain this as well. All right, so try to frame the risk on it. Don't take it. My finger is on the sell market button as the market's doing this. I'm like, it looks good. It looks good. See, move over there. When do I do it? When do I do it? Come on. Like right. I'm like, okay. Okay, I don't know how to scrub to the exact point. I'm not gonna waste time trying to find it either. But anyways, I almost sold short at the market as the market was closing below this gap, kind of right there. And then I see this up candle. Okay, the market's failing to trade to the middle of this gap. It's a sign of weakness. So I'm telling myself at this point in time, in my mind, I don't write this down. If this candle gets overlapped with a large down candle, I'm gonna sell that candle short and I'm gonna target Asia low. So we can see this happens here. Where do I frame the risk? Let's see if we go back by tens, it'll probably land on it. There we go. See? 3R. That's a good trade. That is worth the risk. If that shit doesn't even play out, it's worth the risk. That's a 3R. That's a 3R. And then I don't take it, and then what happens? I don't take it, and then boom, it delivers in literally the next 4 minutes. Bro, I could have taken that 3R, 4 minutes, in and out, done. But I didn't do it. Because I was indecisive about whether the market would deliver lower or higher prices. At this point in time, it made sense to sell this targeting Asia. It doesn't matter what it does for the daily range, but I'm trying to catch the real swing. That's what my model does. But this is not a bad setup. It's not a bad idea. The reason that I lacked confidence in selling the market in here is because of how it delivered at 9:30, how it did not take the London highs and left those smooth. That is where I didn't have any confidence in this idea, and that's where I was indecisive on whether the market should go higher or lower because of how it delivered at 9:30. So today simply required that I just wait, but I did not wait because I framed this idea. I don't take it. I see it deliver in 4 minutes. And then the market takes this low, leaves this big gap right here, right? And then that is where it all ends. That is where I ended up destroying myself out of pure frustration. That's where I sold on that gap. Stop loss above that gap because I thought the market just laid a fat down candle over this low. I thought, oh my God, I was wrong about the read on price again. This thing is just gonna go lower again. This is after I missed that setup. So I'm just gonna take this and I'm gonna just target Tuesday daily low. Like, this is not good at all. This is bad behavior, extremely bad behavior, extremely poor decision making, purely based on emotions, purely based on emotions. See, take the trade. Look where I framed the risk on that too. Tuesday daily low. I was literally just throwing it as far out as I possibly could for the risk to make sense on that. I'm not actually thinking that the market's going to deliver Tuesday daily low. I just wanted the risk to that on that trade to make sense. So I just threw it as far as possible. Oh yeah, we're going to go here. I mean, that's just what you're thinking when you're trading just with pure emotions, right? So that comes back on me really fast, stops me out. That was an extremely, extremely, extremely painful loss. So in here, I'm reflecting it. I notice on this boom right here, this starts to look good to me because we got this little range established, pokes below it, closed back up in it. This candle closed near its high, but the following candle, how that closed like this, that tells me no, not ready yet. Finally takes that low and then boom. At that point, extremely obvious. I see this, I'm like, okay, I have to try this. I have to try this, but I walked away. I'm frustrated, not in the right emotional state to continue a trade. Let me just try this on a different account and see how it plays out. Targeting London highs because it left those completely smooth. Market could go back up there, and what do you know? It goes back up there, and then it goes for Tuesday daily high, the second objective that I listed in my pre-market plan. So when I'm approaching the market with two different ideas, it's making me indecisive on how I should execute at 9:30. The thing is today is this was just purely fueled by frustration. That was the catalyst for me making this bad decision because I did not want to do nothing for 3 days in a row. And then approaching the market, how I come to the market too, my mentality is I'm already thinking, oh my God, like I don't even want to do this trading shit. This is going to be so boring. I'm just going to show up and not do anything or probably miss the move. When I show up with that mentality, it leads to this kind of shit right here, where I feel like I'm missing the move. and then I do something stupid and I hurt myself. All I had to do was wait. All I had to do was wait, and the real move came. And that's it. So, should I count this trade towards my monthly performance? Let me know. And the dog is going crazy right now. I don't know if you can hear him, but that's going to be it for this video. And I'll be back tomorrow with another trade recap. I appreciate you for supporting me. Appreciate you for sticking by me. There's a few of you that consistently comment on my videos. Thank you for that. Really appreciate it. And I'm going to keep putting out content. And we're going to get there. We're going to achieve profitability without a doubt. It's a given at this point. Keep putting in the work, keep showing up, and it's going to happen. So talk to you tomorrow.